Let's focus on another stock, Bharat Forge. That stock is a little under the weather. It's a little bit lower after it missed street expectations, and the stock has lost 35% from the recent peak. To discuss what's the outlook from here on, we are joined by Mr. Baba Kalyani, the Chairman and Managing Director at Bharat Forge. Hi, Mr. Kalyani. Good morning, and always good to see you, Ben. Well, let's focus first on this uncertainty with regard to tariffs. Is there anything you're hearing from your customer base because of these tariffs that could potentially be levied on Mexico, Canada, and some of them, they're important markets for you, right? So your take?
Yes, I mean, North America is an important market for us. Europe is an important market for us. Of course, India is also an important market. The tariff situation is still fluid. We don't know exactly what's going to happen. Only the two tariffs that we have heard, which are going to be put in place in the next few weeks, is the tariff on steel and aluminum. And that largely comes out of Canada, Mexico, Brazil, and some out of Europe. One action that we are seeing because of tariffs coming on aluminum is we have aluminum manufacturing facility for components in the U.S., and we seem to get suddenly a larger traction in terms of people wanting to buy. But, unless that gets converted into a buy, we can't be sure for what's exactly going to happen. So we have to wait and watch how the tariff situation unfolds. We haven't seen the reaction from Europe yet on tariff. But it's a fluid situation. It's not something that is normal business.
Mr. Kalyani, good morning, sir. Prashant this side, and always good to see you on the program. It's a fluid situation. But as someone who's been in the business for a long time, and you've sort of associated with, and you've got a large presence in the US, etc. as well, could broadly the thrust of this new administration sort of, in a way, impede, and here I'm referring specifically on the defense side, some of the Make in India initiatives. It's a large, high-value area, very visible, right? India is the largest defense importer, and we're trying to change that. But buy from the US could, and of course, make in the US, could it, in a way, could that be a road bump towards our efforts and our companies here, sir? Mr. Kalyani, can you hear me? We lost the line. We'll try and have Mr. Kalyani back on in just a bit. But Bharat Forge and, of course, the defense opportunity that Bharat Forge is looking at is also very large. And we'd like to get that clarification from Mr. Kalyani as well. So hopefully back soon.
Yeah, but Mr. Kalyani is back, so let's go
Absolutely. Mr. Kalyani, Prashant here. I don't know how much of my question you heard. My question was with regards to defense. We're the largest defense importer. We're trying to change that. It's a very large, high-value, visible item. And of course, the US most likely will try to tell us to buy more from the US. Is that in any way, will that stand in the way of what we're trying to do here, which is make in India and substitute some of these imports?
Absolutely not. Matter of fact, I think, you will get pushed to buy more things like jet aircraft, fighter planes, and things like that. So I don't think it will impact what you make here. I think the defense opportunity is going to continue to grow. And at least for us, we see the defense opportunity on a growth path.
Okay, since we're talking about defense, could you tell us what kind of numbers we used to work with, Mr. Kalyani? I recall in the past you were doing roughly around 250, 300 crores per quarter. That number went to around 500 crores. But in the past quarter, again, it was in that vicinity of around 350 crores. So what kind of revenue?
It will keep, defense is a lumpy business,
Yes.
Once you execute an order for a high-value item for that quarter, this thing will go up. So you please look at it from a year-to-year basis, and year-to-year, we will continue to grow our business double-digit. That's for sure.
All right. So for the next year, if we want to put in a number for the defense business, should you be in the ballpark of around 2,200, 2,500 crores for FY26?
Yeah, somewhere around there, yes, sure.
Somewhere around that mark. All right. Also, Mr. Kalyani, so that's about the defense vertical. You're sitting a good order book, more than 5,000 crores. So 2,200 to 2,500 crores of defense revenues.
Our aim also is to take the order book to 10,000 crores.
Okay, and execution would be what then if you have to get to numbers? 26 will be 2,200 or 2,500 crores. 27, how much does it go to?
I think every year it should increase by a double-digit number.
Okay.
Normally, defense orders, that's how it grows. We are expecting the ATAGS order to be finalized by March end. That's what the MOD has said. So that is an order that will go on for, in terms of execution, for 3 years.
Okay.
And then that will be followed by other artillery orders and other products that we are developing for the Indian defense, Indian services. So there's a lot in the pipeline, a lot, plus exports, of course.
All right. So 2,200 crores with a double-digit growth at least is what we are looking at from there on. Got that. And that would mean that as a percentage of your total consolidated revenues, it'll be roughly around 13 to 15% or thereabouts. But tell us about business the year and now. You know, I recall in the first half of the year, you said the second half of the year will be better. But in quarter three, you've seen a bit of a degrowth. Will quarter four at least be better?
For the first time in our history, we have had a quarter which I can't even explain to you. But it's been a difficult quarter. It's been a combination of what's happening in Europe in terms of the slowdown, especially in Western Europe. And of course, to a large extent, we have had issues in terms of transportation with our defense business. That kind of slowed it down a little bit. And some of it is, I would admit, it's also been our execution was not as good as what it needed to be. And of course, we have a large baggage with our overseas subsidiaries, and we are going to fix this once and for all in the next 6 months. One way or the other, that will get fixed.
So then quarter four, we'll get back to a growth on a year-on-year basis. Quarter three had a lot of pain. But quarter four, at least on a year-on-year basis, we'll see growth?
Quarter four will be better than quarter three, for sure.
Okay.
On year-on-year, it may not be as good because if you remember, quarter four last year, we had very peak defense export orders, export revenues. And those are finished. Those orders have been executed. And the next orders will only come in after March.
Okay, all right. And you just mentioned about subsidiaries, consolidated minus standalone. That's still delivering a net loss of close to 100, 110 crores on a quarterly basis.
Yeah, so we want to get rid of that problem.
That will turn.
That's the challenge for the next 6 months. We need to fix it, and we will fix it.
And you'll turn profitable on that, on those subsidiaries.
We'll turn profitable or figure out some other way.
Mr. Kalyani, I latched on to that some other way. You said one way or the other will fix it. What's the other way?
Can't go on with the problem for a long time.
Absolutely.
It's not possible, okay? It just takes away too much of time and management and creates headaches.
Yeah. But any other, I mean, you want to fix it, but one is, of course, operationally trying to work through things, but are other options also on the table?
Yeah. Everything is on the table. I can't announce it because it has other implications, but we are at least doing a deep dive and deep study into it.
So you could possibly look at a buyer then?
I can't say anything about that.
Okay, but
you can't put words in my mouth on that.
No, you'll fix the problem, sir. We're just taking note of that.
But it's logical that not completely wrong, right? To suggest that maybe that's also on the table, although you're not saying anything.
No, not wrong. But I've said we'll fix it in 6 months. We'll fix it.
Okay, all right. That's a very, very emphatic statement. Mr. Kalyani, thank you very much, sir, for joining us here on CNBC-TV18. It's a pleasure having you with us here and speaking to you about the business.